What's going on, guys? Amy Nicholas back with a new video. I wanted to just kind of share what I've been working on with investing into the stock market, plans for the future, what's going on, current, present time. Today's Saturday, but what happened this last week? What's going on? Like, why invest in the market now? Is it a good time? Is it are you gonna make some money? Right? I don't have a crystal ball, but I will tell you what's working for me. And right now, dollar cost averaging, which means buying a certain amount into the stock market on a consistent basis, whether you're buying ETFs, whether you're buying crypto, whether you're buying stocks, individual stocks, index funds, whatever it might be, but that you're consistently doing it. Me personally, I like to consistently buy on a daily basis. So Monday through Friday, I have set up recurring investments on my Robinhood account. I have weekly investments on Fidelity, which unfortunately does not have the ability to do daily. And then I've got manual. I do a manual daily investment on Fidelity because that's where I started my $8 a day investment challenge. So to give an update on that, if you've watched my other videos, where I'm at is, okay, so there was 2 ETFs that I invest in for $8 a day through Fidelity. I purchase this every single day. And one of the things that's great about doing the dollar cost average is that you're not trying to time the market. You don't have to worry like, oh, I need to enter at this certain price or this certain amount, because you're consistently buying. You're going to be purchasing at different price points all the time anyway. So my routine lately has just been early morning, because I do this one manually, is early morning once once all the institutional trading has kind of like settled down, which usually is about 10:30 Eastern in the morning here in the US. And right about then is kind of when I just have a calendar alert on my phone, says, hey, buy your $8 a day investments. So I remember to do it. And those 2 investments are VOO, which tracks the S&P 500. Basically, you are getting a tiny little chunk of 500 companies that are the top 500 in the US. And then VGT, which is a ETF that tracks the NASDAQ 100 tech stocks. So all the big players, Microsoft, Apple, Meta, Tesla, things like that, are part of that VGT. So where are we at with the $8 a day? I believe I posted on my Instagram, I think I said day 14 on Friday, if I'm not mistaken. So for 14 straight days, and this is a little over 2 weeks technically, because you can't, the market's not open on the weekends, so that's why I do $8 anyway instead of like 5. And my total investments right now, let's see, we are looking at, okay, so 128.02 inside of VOO, 129.69 128.02 inside VGT, 129.69. Why are they different amounts? Because they have different values. So basically, I'm up. We'll say that I'm green. Woohoo! Not by a ton, but I'm up, and so each one is worth a different amount. So VGT, which is the tech sector one, for a minute last week it was up, and then VOO is beating VGT. So here we are. I've got, sorry, Fidelity. Y'all need to fix your mobile app. It's hard to read. VGT, I'm at total gains. I don't know if you guys can see any of this, but it's probably backwards or something. $2.64. We are in the money. Woohoo! And then VOO, I'm up $3.28 in the money. And like I said, value of VGT 128.02, value of VOO 129.69. So I've invested 14 days. I think that's how that math works out. About 14 days into each, $8 per day into both, and the ETF VOO, which I put in the pinned comments, by the way, is one of my top 3. That one that tracks the S&P 500 is up. It's doing better. Why is it doing better? Because VGT, which tracks the NASDAQ 100 tech sector, has been extremely volatile, and there was several days where that particular ETF was down. It was down anywhere from 0.2%, 0.5%, almost 1%. And VOO, which tracks the S&P 500, the S&P has been doing really well. I think a lot of people were concerned, myself included, that the S&P 500 was hitting or about to hit all-time highs again. And should it, that there would be this retracement, this backwards kind of movement. And I think what saved that, just my own opinion, I'm not an expert by any means, but I think what saved that from happening was Trump's inauguration. Trump getting into office, him taking, the oath, he's in, okay, great. We know now what some of the future holds for our country. So I think that is one of the reasons. And then the S&P 500 actually closed over 6,100 points on Friday, which I think is significant that it held that from Thursday and Friday going into the weekend. Because sometimes when these movers, these things happen, if the market is volatile or uncertain, Fridays tend to be kind of iffy, because you're going into the weekend. People are kind of more hesitant about holding things over the weekend. And I think it says a lot that it closed at a higher amount than the previous Friday. So I think we're going in the right direction with S&P 500. And I think with dollar cost averaging, you always win in the long run. If you hold, you buy and you hold, you will win out. So any volatile movements, there's some stuff going on next week with the feds and interest rates and all that stuff. Any movements like that where the market could go up or down, could be, kind of crazy for a minute. It doesn't matter when you're dollar cost averaging, because over time, you're just going to keep putting money in regardless. We're not trying to say, well, it's at this level and I don't want to buy, and, none of that. It's just being consistent. And to me, and this is my experience investing in the market, the easiest way to grow your money is to just keep buying, right? Just keep buying, just keep putting in, just keep consistent. I think too many people will try to be like, well, I've got some money I want to invest into the market, and they'll want to buy in at a certain price, and they'll want to put a certain amount of money all at once into the market. Me personally, I recently opened a Robinhood account, and it's great because you can do so much from your phone. It's very easy to set up daily investments on that website. And what I wanted to do with that account was just take, a certain chunk that I had from Fidelity, move the funds over to Robinhood, and just buy little bits of the market into different stocks that I was interested in purchasing, a little bit of crypto, mostly stocks though. And what I saw have happened this was pretty much in the last week, last 10 days, that every stock that I had selected in a couple ETFs, that they were all green. And I've had this open for, I think, about 5 or 6 weeks now on Robinhood. I'm green on all of them, which really shocked me because some of the stocks are up and down. Like one of my stocks I picked on that account was Meta, Facebook. And let me see here, switch it over so you guys can see this. These are just small investments. Like I'm investing anywhere from $5 a day to up to maybe $50 a day for some of these ETFs and stocks, and it fluctuates. I'll change it up, but I don't know if you guys can really see this phone and everything, but you see everything's in the green. Everything on the side is all green. So I've got Facebook, I've got SCHD, which I mentioned in my pinned comment. That ETF is great for dividends. If you want dividend paying consistent income, and you want something stable that will ride out the market, because what I noticed with SCHD, that was one of the first things on my Robinhood account that went in the green. I was putting money into these things every day, and that was one of the very first things that went green when the market was kind of like, woo, because it's much more stable, and it's kind of a slow and steady growth, because SCHD is an ETF that tracks blue chip dividend paying companies. Okay, so these are companies that are not super exciting, but you just want stability and growth. and you want some dividends, highly recommend it. It's very inexpensive too. One share of SCHD, it closed at $28.08, so very inexpensive. The other one I have is Amazon. I've consistently made money with Amazon. Like every time I am like, oh, I can put my money elsewhere. But when I look back at trades and investments I've done over the last year, Amazon has just continuously made me money. And it's like just dollar cost average. Just keep putting money in. And you'll see Amazon just consistently keeps you know. It's had a couple of like pullbacks, but it tends to want to just keep going. So it's a little bit like the S&P where, in my experience, having owned it, it's just continuously gone up. And I think it's a very great, stable company at this point in time. I mean, it's been around since, freaking, 2001, 2002. So it ain't going nowhere. Netflix. I just started investing in Netflix, like 2 weeks ago, I think. And Netflix was, I didn't even know this was going to happen. I started investing, and then Robinhood puts it on your account and says, hey, earnings are going to be reported soon. And I think it was like 10 days out. So it told me about 10 days out. And I had just started putting money in, like $5 a day in Netflix. And all of a sudden, when they did come out, I only had maybe $40 in there because I was just starting to do the daily $5 a day. And I saw that I was green and that I was up, like, I don't know. The Netflix shot up. It went from like 800 something, like 866. And when earnings came out, it did so well. That freaking stock jumped $120. And I was like kicking myself. I was like, dang, wish I had owned more of it. I didn't own that much. I didn't even own a whole share. It was fractional shares. But I was in the money like, I don't know, $6 or $7. So I was like, you know what? Sometimes when earnings come out, there's this woo, and everybody's freaking out, and it goes to the moon for a second. I was like, let me just cash this out. So I cashed out, and I took my $6 profit, whatever it was. And I said, I'll come back as soon as this settles down. And sure enough, I think it went all the way up to like 1,000 something, from 866, right? And it hit a bounce level, and then it went back and came back down to like 960. But I mean, still a tremendous move. Like if you had owned Netflix this past week and earnings, you still would have been happy. Like it still jumped a lot. But I just decided, I'm gonna take my little profit and I'll keep going. So I immediately, like the next day, I started buying it again, and at a lower price than if I had bought it that one day when it was over 1,000. So yeah, I own like 0.03 of Netflix right now. But it's green. Like I said, everything I have picked on Robinhood, I'm in the money. Nothing crazy because I don't have a ton of investment in this Robinhood account. I've got most of my money actually chilling in cash so that I can do the daily buys, the daily investments. And okay, so what's next? JEPI. This is a JP Morgan ETF that pays a monthly, get that right, monthly premium to you. I don't call it a dividend. You could call it a dividend. It's technically not a dividend because they're not investing into a company. What is happening is in this ETF, they are taking the money from the people investing, like myself, and they're using that money to go and sell call options. So I don't do any of that myself. It's a little bit on the technical side. I've learned about doing covered calls, puts, and all that sort of thing, but I don't do it myself. I said, let somebody else do it, and I'll take a premium every month. So the JEPI one, they will invest in, I think it's, let me double check. They call it equity premium. They will invest in large cap stocks or do these covered calls on large cap stocks. So that's kind of the thing. It's somewhat stable. You'll see it move a little bit up and down here and there, but I'm green, and if you want to invest in it, I think this changes monthly, but the last premium they paid, I want to say it was about 39 cents per share, which is really good. I think that's like a 9% annual return. And their current share price is $59.08. So you don't have to have a ton to invest into that and get some dividends or get some premiums. The other one I've got is also JP Morgan, JEPQ. This one is a little bit more volatile. This one it's similar to JEPI. I call them JEPI and JEPQ, where they're doing covered calls. They're doing some, risk strategies. In fact, when I first purchased these, I think on my Fidelity account, they were like, you have to accept this waiver and blah, blah, blah. And I was like, yeah, I get it. Like, they're doing call options. It's not guaranteed income, right? The dividends, the premiums, whatever, will change every month. The amount you put in can go up and down. We all know there's no guarantees, right? So this one's 5809, and JEPQ is going to do the covered call options for the NASDAQ 100. So JEPI does covered calls for the large cap stocks, a little bit more stable. And JEPQ does the covered calls for the NASDAQ 100 stocks, which are a little bit more volatile. If you heard what I said earlier about VGT, that's an ETF that tracks the NASDAQ 100 stocks, and that's part of my $8 a day challenge. That one is, it's up and down, right? So JEPQ, in essence, is also up and down a little bit more than JEPI. And that one, though, pays 11% annually. But what happens is you get paid on a monthly basis, which is why I'm investing in both of these. So JEPI and JEPQ, the end of this month, January, it'll be my first official full month owning these shares. And I can tell you guys, once I actually get paid, what I'll get in my first full month of owning these shares. 11%, like I said, return annual for JEPQ, and 9% on JEPI. So that's how they factor in the dividends. But when it comes out on a monthly basis, I think it's like the last December was 45 cents a share. It's about 45 cents a share for JEPQ, about 39 cents for JEPI. So those ones I invest in because I want monthly income, right? I want to know that my money in the market is going to bring me somewhat, I don't want to say guaranteed return, but it's going to be like more guaranteed than the market going up and boosting what I'm putting in. It's like, no, you're putting money in, it might go up, but you're also going to get paid every single month. So that's for the win. And then lastly, I'm also putting money into VOO in this account, my Robinhood account, as well as the $8 a day challenge for my Fidelity account. The reason I chose to do it double dipping, was because I just wanted to do more. I wanted to keep the $8 a day challenge separate. I didn't want to change that amount, and say, hey guys, I'm doing $8 a day, and then I'm going to change it in the middle. Just keep that going just to see where VOO and VGT, like how they compare against each other. But in this account, I bumped it from, I think I was doing $5 a day VOO, now I'm doing $20 a day. So yeah, I just wanted to kind of share with you guys, that, like I said, I don't think you can really see this, but if you look where all the green boxes are, everything is green in this Robinhood account that I started 5-6 weeks ago, and I'm just dollar cost averaging, just putting a few bucks in every single day. Oh, forgot to tell you my crypto. I also got crypto in here. A few bucks a day, every single day, just to not overthink it, okay? Because one of the things I noticed I was weak at was trying to jump in, let me buy 5 shares now, and I want to get in at the right price. And then you watch, right? You're like, oh, dang it. Like, as soon as you buy in, this happens to people all the time, right? As soon as you buy in, you see the stock going up. You're like, no, now's a good time. It's going up, it's going up. And as soon as you buy in, you're like, dang it. It turns around, right? How many times does this happen? And so rather than trying to perfect, some perfect trade and all this, I was like, let me just buy a little bit every day, because this has worked out better for me in the past than trying to time it. There's a great, fantastic quote, and it goes, it's better to have time in the market than to try to time the market, right? It's better just be consistently in it, just keep buying, than trying to pick the right exact time to buy. So crypto, what I have in crypto, excuse me. Now here was a play where I could have dollar cost average, and I just chose to buy it all at once. But I bought 3 shares of the Trump meme coin, and it's just fun money. Like, I didn't care. I'm like, whatever. That one's down, which is okay. I'm not worried about, ooh, I bought it and it's going down. For me, I just, all these coins, at some point or another, they just become volatile. And then you got to be expecting that, you put money in crypto and it might disappear tomorrow. It might go up, it might go down, you know, it might be in the middle for a while. Crypto is, to me, kind of like investing in the NASDAQ 100 stocks. You just get in knowing it's volatile. It's up, it's down. But over time, you can see the returns. I've watched numerous videos where people shared like, hey, I just bought $5 a day of Bitcoin, or I just bought $2.50 a day of Solana, or one of these other coins. And they'll show, you know, after a year, 2 years, 3 years, like what happened, right? What was the return? And like every case, they were up, right? Because they were dollar cost averaging. So that's what I'm doing with Bitcoin. I've got Bitcoin. I'm green on Bitcoin, not by much, but I'm green. I only have, what do we got here? About $60 invested in Bitcoin because I'm doing $5 per day. Now the difference with daily investing crypto versus daily investing stocks and ETFs is that crypto, the market never closes. So I love that about crypto. Ethereum, I was buying $2.50 a day of Ethereum, and I just kind of changed my strategy and decided, you know what, I'm going to put my daily investment into Bitcoin instead, because all other coins follow, right? If you look, every time these other coins are up or down, it's due in part to where is Bitcoin? Like, is it up? Is it down? Right? So, yeah, I've got like $36 into Ethereum. Solana, I don't even remember why I bought this. I think I knew a couple people that were, you know, more crypto people than I am. They have done way more research than me. And they had just said this was one of the big ones. So I had started putting a few bucks in. I'm like $23 into Solana, and I'm up $1.34. This is actually my biggest winner without even trying. It's not a daily investment. I kind of had thought about doing it daily. Excuse me, I was doing it daily, and I had paused it again because I wanted to just buy Bitcoin instead. Just make that my daily. And then I have a whole dollar's worth of Avalanche or AVAX because Robinhood was like, hey, answer this quiz and you can get $1 of AVAX. I'm like, okay. So I'm not even up a full penny, but hey, it wasn't my dollar. So that's where we're at. So yeah, guys, just wanted to share that I think dollar cost averaging is just a way to go. Just keep buying every day or every week or whatever your strategy that you want to keep consistent about. Excuse me. I like to do daily because I'm studying the markets daily. I'm kind of looking at things daily. But if you feel like that's too much, you can set up weekly investments. I think on most brokerages. There's some limitations though out there. Like I have a Schwab account that I day trade from, and that one you cannot buy fractional shares, which means like, you know, putting in $5 instead of buying you know, $500 you know, VOO. I think VOO is like it's like a $550 stock, right? For some reason you can't buy fractionally on these ETFs on Schwab. But I've seen most other platforms you can do this. So just make sure whatever brokerage platform you choose to go with, that one, you can find one that fits your style if you want to invest daily. Like that's why I opened the Robinhood account, because I was like, oh, that's so convenient. You know, you set it up in there and it says, hey, you know, how much do you want to buy every day? And do you want to do Monday through Friday? And I'm like, yes. So very, very simple, very easy. It debits from the account that I have, you know, the money held in. I don't have to do nothing, right? It just does it for me. And then also that you can buy fractional. So whatever stock, ETF, cryptocurrency, whatever you want to purchase, that you can buy it in fractional shares, right? Make sure that whichever platform you choose, that you have the options available to you. Because there's so many now. I think from what I've heard, Robinhood, Webull, and Moomoo, I want to say, are the ones that you can do daily investments that are automatic and recurring, where you don't have to go in there manually and do it. And I have yet to hear of any other big name brokerages that do that. I like my Robinhood. It's easy. Okay. And Robinhood, the other thing I like about them, and I'm not sponsored by them or anything like that, but Robinhood, I like that even when the market is closed, that I can get alerts, like after hours, like so the market closes at 4 p.m. Eastern. Let's say out of nowhere, some stock shoots up. Like Netflix, okay, this past week. They reported earnings after the bell, from what I remember, and I got alerts on my phone after the market closed because it was in the after hours session. Now, I've usually set up alerts through Yahoo Finance, and what I noticed was they will not trigger any alerts. They will not send in any notifications if it's outside of the normal trading hours, 9:30 a.m. to 4 p.m. Eastern. So just thought I'd mention. That's another reason I liked Robinhood was, I can set up alerts and it'll notify me as long as it's pre-market or after hours. The market is still rolling, but it's not technically open. So yeah, if you guys have any questions, feel free to post in the comments. I'll keep you updated with the $8 a day challenge and whatever else is going on. But just keep it simple, y'all. Don't make investing complicated. Don't try to time the market. If you just want to see your money grow and grow, hopefully this year, again, see it grow better than putting it into a measly, savings account or something like that. I mean, even looking at these high yield savings accounts, which are great, to kind of keep your living expense money in, they pay in 4 or 5% interest. But the stock market has been doing so well the last couple of years, no guarantees this year, right? No guarantees, but it's been doing so the last couple of years, you would have gotten somewhere between 20 to 22% return. If you have been buying like the S&P 500, that's about what that's been returning. And then for example, the VGT, the fund that I've been buying for the NASDAQ 100 tech stocks, that one, I want to say it was I don't have it in front of me. Let's say it was 30-some%, 40% return. You just got to be prepared for that volatility, okay? So don't be like, oh, well, one day it was up, one day it was down, I'm out, So just remember that. But yeah, feel free, guys, comment, questions. I am not a financial expert or advisor or anything licensed, okay? I'm just sharing my own journey, my own experience. I've been investing in the stock market as a somewhat active investor since 2012. But most recently in the last few months, I've gotten really into it. And I day trade, I do these investments challenge. And just here to help y'all navigate its confusing world out there. So take care, guys. I'll see you on the next one.